What is going on, guys? Welcome on into tonight's stream and Merry Christmas, or I guess day after for those who are celebrating Happy Holidays. And we're about to go into a shortened week in the stock market, a 4-day week, Tuesday through Friday, and we shall see if Santa's going to be bringing any gifts this Christmas, I guess, rally season, which is historically this week between Christmas and New Year's. Hope everyone is doing well. Had a good time, friends, family, ate tons of good food, cookies, all that good stuff. If you drove this past weekend, that is great. That is great to hear. So we're gonna get into it really quick. We are looking at futures as of right now. Here's the S&P futures. Essentially, it fills in a lot of those gaps in the after hours pre-market trading that we don't really necessarily see on the daily chart of the S&P. So we'll start here and get a good feel. We had a pretty high volume day on Thursday. Volume really diminished a good amount on Friday. Not surprised. People heading off into the weekend and, into the holiday, yada, yada. So really, are we expecting a ton of volume this week? No, we're not expecting a ton of volume this week. In terms of this week's economic calendar, what do we got? So we've got nothing, obviously, today, holiday. We've got trading goods, advance report, case chiller, U.S. home price index, U.S. FHFA, home price index that's tomorrow morning. We'll see if those are coming out pre-market, so 8:30 a.m. Eastern, and then as well as 9 a.m. Eastern. So we'll see if those have any effect. I really don't think it's going to. And then 10 a.m. on a Wednesday, pending home sales shouldn't have a huge effect on the markets. Thursday, jobless claims, and then Chicago PMI on Friday. So it's not a heavy week by any means at all, but if there was news to move the markets, most likely will come out later in the week. So keep that in mind for Thursday and Friday. What we're going to do is we're going to go through kind of an overview of what's going on, cover a couple different things, and then ideally we're going to run up a bunch of stocks at the end and go through a nice watch list, kind of make a plan for attack, I guess, for the coming days, weeks, potentially further, depending upon the time frames we're looking at across different stocks and whatnot. So that's the plan. That is what we're going to do. And futures-wise, we are up 0.59%. So take it as you see fit, but the S&P is gapping up, or at least is pushing up in the early futures. It's only been open about an hour and a half, so we haven't had too much extensive trading. But since we opened up, we pretty much closed on Friday right in here, and then we had this big push up here once futures opened so far this evening. Now, of course, there's no guarantees that this will hold into tomorrow, and we're kind of making almost looks like a bull flag here on the 5-minute chart. So we'll see if this continues and we get some continuation, dare we say, to the upside here while we're on the stream. We'll keep an eye on that. But that's a look at futures. Big picture on the charts. Let's go back to the S&P. Let's go to SPY. Get a big broad overview of where we're at. So big picture downtrend, right? That's essentially been driving us this entire year. It's essentially now a 1-year downtrend on the daily chart for SPY. Had this uptrend right in here that has since broken back about 2 weeks ago now, or about a week and a half ago now. We broke down, and now we've been in this consolidation range. So on SPY, we've pretty much been in this box between about 387 and about 378. Okay, we did wick down to about 375 briefly, but quickly was bought up in the afternoon on that day. So we're in this box, kind of where a lot more of the volume has been traded the past, week and a half or so. Really the past week, roughly. Across the S&P. So now that we're in this box, what does that mean, right? It means that, hey, we break down below this 378, probably looking at that test of that wick, and if we break below that 375, very good chance there's not too much volume in terms of the volume profile here. We haven't traded too much volume in this range from like 369 up to about 374, so could easily come down and push through that level. That would start to get us closer to this blue line right here, which is our June low. So in terms of that like inverse head and shoulders type of pattern look, if that was to be the case in terms of the S&P maybe setting up at some point right into next year, right? Because it's going to take time, right? This is the June low. Then we had this low here in October, so a couple months later. And then a couple months after that, potentially put in your right shoulder. So maybe sometime in January or February, if we never go down to make a new lower low, and this is the end of the bear market, or let's say the bottom, or towards the bottom of the bear market, let's just say, right? If that's going to be the case, we may end up putting in some sort of, inverse head and shoulders at some point in the next, 2 months or so. We shall see. That's yet to be determined. And, of course, we don't have to do that. We can just go boop from here for all we know. For all we know. Or we can just obviously flush through. But, of course, we're keeping an eye on that June low level as a potential balance zone, potential support zone, if we do come down and test that at some point in the future. Now, in terms of upside, it's very funny because you go and you gauge sentiment, and some people who are the perma bulls, and there's a lot of perma bulls, people who are just perpetually bullish all the time. Sure, there's always going to be those people, but at the same time, right now, you have got a lot of people who are skewed to the downside here. A lot of people who are definitely skewed to say, you know what, I just think that we're going to go lower, and we're bear market lows aren't in, and yada yada. Fine, where it felt all well and good, but in terms of upside right now, if we end up holding and this overnight session holds and we kind of push higher into this week, where could we head in the near term? Well, we have this 50 SMA, which is kind of holding up as a nice little resistance so far here on the S&P, which is going to put us up around this 387, 388 area across SPY. So watching that 388 as a potential zone of resistance also lines up pretty much with a gap fill. We just kind of barely filled it back here on Wednesday this past week. We'll see if we end up filling it fully, but it lines up with a gap fill on SPY as well. So that's going to be kind of our first line in the sand. We're at here, we're sitting down around 382 or 383 at the close on Friday. If we end up holding this gap up of futures overnight, we're probably pushing up towards that 385 or so area, and that would potentially get us closer to filling that zone up to about 388. And we'll see if that happens tomorrow. Now, beyond that, then we're looking up into the 390 zone, which is going to be a pretty key spot. Now, that, of course, was an area, the mid to low 390s was an area so far the past couple of months, couple of weeks really, I guess, past like 2 months, but past couple of weeks, that we found some good support. So you can't deny that. We found some good support here up on SPY. Every time SPY came down, sub 395, boom, boom, bounce, 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 held the trend line, popped up, and then had that false breakout right up in here. And that was, I believe, after CPI back on the 13th of December. So we got some time until the next CPI. I'm not really thinking about that right now, and not too much to worry, to be honest, when it comes to CPI. Again, like we've been talking about, the realities here is that the most likely scenario is that unless we get a crazy surge in oil, we're probably skewed to the downside, and the risk of betting on the CPI is probably skewed to being wrong. Where in terms of if you're going to guess where it's going to go, you're probably going to go wrong more often than not. Now in the next who knows 6 months, 12 months on betting that it comes in higher than what it actually comes in at. So the risk, I think, is skewed to the downside there on the CPI. Now again, does that necessarily mean the market's bottomed out? No, because what it really probably means is that we've got more concerns, right? If we start coming in just as the Fed and just as in many analysts predicted that inflation wouldn't rise as fast as it did, we might see the exact flip side of that right now the next 6 to 12 months, and it might decline a lot faster than they expected. So in the next couple of months, we should start seeing a lot of the rent inflation, some of the other housing metrics that are really coming down now in a lot of the data start to be reflected inside the CPI a lot more. There's a substantial delay in that, and how they calculate the CPI, like it is what it is. But you've got a lot of people who are like, all completely against how they calculate it. Some are like, it is what it is, leave it alone. And then there's kind of like that blend in the middle, and that's seemingly kind of where Powell has been kind of positioning himself. And at least by the latest Fed actions and them not hiking by 75 basis points in the last hike, at least they're aware of the risks, in terms of, you'd think they'd be aware of the risks of going a little too far. So with that said, now we're talking about the Fed, I might as well pull up the next rate hike potential, the probabilities for the next rate hike, which is still 36 days away, 37 days away roughly. We've got February 1st is the day. So we've got an entire CPI to go through, which will come out in about like 2-3 weeks, rough 3 weeks or so. That CPI comes out for the month of December in mid-January, and then the Fed will have to digest those numbers. Then they're going to make their call about 2 weeks later or so on what they want to do. And as of right now, we are skewed to a 65% chance the Fed is going to go with a 25 basis point hike, and a 35% chance that's going to be more so of a 50 basis point hike. I know you guys can't see, sorry, my bad. But yes, these are the probabilities. So the current target rate is 425 to 450, and then this on the left would signal a 450 to 475 would be a 25 basis point hike. And then this one on the right, 475 to 500 would signal a 50 basis point hike. So that's where we're at in terms of where Powell and the Fed are at. And then, of course, it'll be interesting to see what happens next, because then by the March hike or by the March meeting, there's no guarantees that they even hike, right? Because what if they decide to go 25 and then data keeps coming in low and then they say, you know what, we're just going to pause and we're going to leave rates here for a couple of months and see what happens, right? In a couple of meetings, maybe that's their thought process. We'll see. If that's the case, right, what we're going to have is they're going to have CPI for the month of January coming out mid-Feb, and then you're going to have CPI for the month of February coming out mid-March, and then by March 22nd, they make their call. So they're going to have 2 more CPIs to digest inside of that time frame. So it wouldn't surprise me if they pause or the next couple of data releases are going to be huge in determining these hikes. So you're trying to gamble and guess, like, oh, they're done, oh, they're going to keep going. You know what? The data can come out and completely say the opposite of what you might think right now in the next 3 months. So that's what's going to be driving the Fed and potentially driving the markets, at least in the short term. The bigger picture to take away, though, is that just like while these things are important in the short term, you kind of see that it doesn't necessarily matter, and the bigger picture is more important here, because we got that big move off of that, or that gap up off the CPI that came out last month or 2 weeks ago, right? A week and a half ago, whatever it was. And the CPI comes out and it comes in lower than expected. Great, cool. Market gaps up, and then we just proceed to give it all back, and now we've gone even lower. So good news in that situation, which one would have maybe thought, oh, great news, we're going to break out this trend line, and the bear market is technically over from the technical perspective, at least until unless we were to kind of false breakout and go down lower. And we kind of got a false breakout. It was just one candle, it was one day. We kind of had a false breakout there. I was thinking that maybe we'd see a bigger move to the upside and then ultimately come like this. Ended up being just a one day type of thing. Yeah, it is what it is. But that's just kind of how the market works. And even though there was technically good news at the time, market's like, you know what, we're going to roll over and we're going to dump. But then the Fed came out the next day, and Powell was somewhat hawkish there as well. So a lot of other factors to be paying attention to when it comes down to it. Let's take a look at yields. So here's the 10-year. Let's go back to past 6 months on the 10-year yield. Here's a 2-hour chart. So you're seeing that we've got a pretty big move up, obviously, from August through, late October, and then a pretty nice substantial move to the downside here the past 2 months now almost. Although I would say the past 2 weeks, week and a half, 2 weeks, we've been starting to curl on up. So key spots to watch on the 10-year are going to be this 3.8. Oh shoot, I was in the wrong tool. 3.8%. And then a 4% level. 4% was the prior. Let me get rid of this because this line is not thick enough for me. I like them extra thick these days. But no, in all seriousness, I like to make the lines thicker, because when you have these super thin horizontal or trend lines, it's not as useful. I recently switched, so some of my lines are super thin. I make them on TradingView. I have it set to, I believe, a 3-point line. I can make it 4, but 3 is fine. 4 is a little too big in my opinion, but I used to have it at 1 point, but it's not. It's too thin in my opinion. So 4% there, 3.8 was a key spot that we rejected hard off of this move right here, late November, early December. Popped up to 3.8%, and then boom, got hit pretty hard and fell off, and then made that push down to sub 3.5, down to 3.4% on the 10-year. This is gonna be fun to watch. I mean, the reality here is that I think that the correlation between the 10-year going up and the market going down, it's losing some of its steam, and then the same thing with the 10-year coming down, market going up. The correlation is still generally there. It's not as strong. I will say we've noticed the past couple of weeks, it's not as strong as it had been. We'll see if that changes going into the new year, but it's not as strong. So this, to me, is more so going to be telling us, giving out much better signs for the recession trade or the recession fears into next year. I'm not really super concerned until that 10-year starts coming down under 3.2%. That happens, and then I start to say, okay, it's almost it's a shoo-in if it's not already a shoo-in. It's a shoo-in for a recession. And why is that the case? Because that's the bond market coming out and saying to the market and saying to people like, hey, pay attention here. Fed's got rates up here, but we don't actually, the 10-year and yields are coming out across the board. I'm sure other, not just the 10-year. You look at the 2-year, look at the 20-year, the 5-year. All yields in general are going to follow some sort of a similar path, roughly. They coming down hard, and to me, the 10-year under 3.2% starts to go, starts to get me thinking like, here we go. And that would probably mean cuts are coming, in the next couple of months or quarters. We can't look at it day to day or week to week even. You got to look at it months to quarters when you're looking at the big picture of this. If that happens and we stay below 3.2, I would get concerned, or not maybe concerned, but I would start looking at the realities of rate cuts being more likely than not at some point down the road. So that's a big picture overview. The dollar, by the way, has just been this like consolidation phase of, whatever. It's trending down, and it, has to still break down below 103.5, but it seems like right now the dollar might just be in this weird consolidation. Not expecting too much unless there's some other big time news, over the world, across the world, right? This week we shall see. But big levels on the dollar here is going to be under this 103.4, which is a low of, back here like the 14th of December, or a push up over 105 would potentially, 105 could potentially start, the true breakout here, and a move back up a couple bucks. And 108 gets me worried. I would not say worried, but gets my attention. Below 108, I don't really care too much. It's notable, but I don't really care too much. And then below this 103.4, I would start to be okay. Downside is continuing on the dollar. So we'll see what we get this week, but it hasn't moved too much the past couple of days. So I'm not expecting too much here. Although the slower things kind of calm down, the more coiled up it gets, you're kind of setting up for some big moves at some point, one would think. So with that said, it's a big picture overview. Hope everyone is doing well. For those who are coming in now, happy holidays, Merry Christmas for those who celebrated and all that good stuff this past weekend. It's going to be a short week of the markets, but it should be a fun week. There should be a lot of opportunities. I think, even though there's not going to be humongous moves, I would think there's still going to be opportunities, and I think you might find more of those in small cap land this week. So we'll cover some of those in just a little bit. I want to cover some large caps first. We'll kind of talk about the overall market and all that good stuff like which we pretty much did. And then we'll dive into, in just a little bit, like some small cap. Let's start scanning for small caps like we did last time because it's fun. And there's going to be a lot, I think there's going to be a lot of potential upside there individually. And there's a lot of, I come from that, small cap swing trade background. It's been fun, and I really like when things heat up, and they've been pretty hot. We've seen some better action in small caps, but you got to play them. There's a style and a strategy behind it, and so right now what's working, we'll kind of talk about what's been working, and then what we could look for going forward here in the next couple of weeks in historically and seasonally a very strong time of year for small caps. Again, the past 18 months, it's been kind of wonky because of what's happened, what happened 24, 36 months ago, and how the markets have reacted. But, we're going to start to kind of, return to some sort of mean at some point here. One would think. So that's where we're sitting at. That is where we are sitting at. Hope everyone is doing well. NEO had NEO Day, December 24th. Bug Auto Show, maybe auto sector hot these days. Let's take a look. That brings our attention over to NEO. I haven't looked at NEO in a couple of weeks, I feel like. I'm sure it's crossed my mind, but take a look at this. So NEO Day in the past doesn't necessarily mean you're going for a rip. And we've seen it happen in the past where it's, the run-up in anticipation of the day. It just feels like that trade hasn't been there the past, 12 months, roughly across the board, even just in general. However, we've got these levels on NEO's chart. I'm going to go up to the 1-year chart here to get a better view. So we had NEO honestly kind of has that same Tesla-esque type of look. And it kind of has, dare we say, done what Tesla's doing now, just a little bit ahead of Tesla almost, right? We can kind of compare the charts in a second. We'll look at Tesla in a second actually, but it's breaking down. The thing about NEO is that there are still more gaps to be filled on the daily chart. So as much as people who are long don't want to hear it. If you are long NEO, you don't want to hear it. This could, if the bear market continues and we continue to accelerate to the downside, I would not be surprised if these levels go. Wouldn't be surprised. We barely filled. Well, we filled this one gap right here, so we can kind of get rid of that. Let me get rid of that box, this white box right here. Let's get rid of that. This one right here has not been totally filled. And again, you don't have to fill gaps back to the downside. These are just gap ups from, one day into the next. That's all that these zones are, showing, really. They don't have to get filled, but many times they do over time, right? Over a stock or the market's history, many gaps, many more than not get filled. And so that's why we like to use them. Now, it ended up that we found this area to be nice support. So for right now on NEO, and by the way, we had another smaller gap right here. Look at this, even a shorter term gap right here on NEO. That's filled. So if we can hold around this like 1050 area, that would be maybe the base to play off of, right? So like you want to see this area right in here holding on NEO. Some good volume in trade at that level. It's kind of made a nice couple pops off the bottom. Back testing, it would be a higher low we would be seeing, right? We had this low right here, had these lows right here, had this low right here. If this area holds, would be a higher low, would continue that move up and potentially send us up towards, some of these targets, up towards this $14.75, $15. That's a small gap to fill back. The upside right there. So there's some small levels to watch, and we're trying to build back above that 50 SMA. So it's looking like there's something's trying to go on, and we've got some good volume here, especially as of late, right? Some good volumes come in the past couple months, and a lot of that volume, right? These big spikes have come off of, relative lows on NEO. So keep that one in mind. But that's NEO's chart, right? So this is the big picture on NEO, right? Let me zoom this bad boy out, right? Here's the past, 2 years, 3 years on NEO. Take a look at Tesla. Does it not look kind of similar? It really does. And the thing about Tesla, though, and if you look at these charts, Tesla's going to be an interesting stock because you get a lot of people who love it, absolutely love it. They would, die for Elon Musk. Seriously, there are a lot of people out there who would, or at least they say that they would. It's crazy. It's a cult stock on steroids, and it had held up surprisingly well throughout this bear market. Of course, it was down a lot at points, but it had held up surprisingly well despite the market and despite other stocks getting absolutely obliterated, and despite how much of a run it's gone on, which to some signaled, oh, we got some good strength here. There's probably some more fundamental strength and some good value here on Tesla, right? And if that got you into buying this year, you're getting destroyed right now. On top of that, factor in tax loss harvesting, selling some stocks that have been big losers by the end of the year to kind of minimize your tax burden on winners and whatnot, right? Or to use that as an advantage and come tax time. There's some of that going on, so I'm not surprised that it's accelerating to the downside. The volume's getting pretty intense in terms of the sell-offs, at least higher than we've been seeing the past year or so, roughly speaking. You got to go back to 2020 to see volume like this on Tesla, when it technically was trading at a much cheaper valuation back in here to the left of our screen. So you look at this and you say to yourself, okay, where are we going? Where could this go? Well, we're in absolute free fall mode. This is beyond, technicals are important. Like we always talk about, there's levels and pivot points and support, resistance. Great. We are kind of beyond that. When you get into a point like this where a stock is just in an absolute free fall, or when it's going the other way, when it's an absolute parabolic beast, you're in a completely different mode, right? And these things start just going absolutely out of control. And right now we're in the middle of just an absolute out of control sell-off. I will say that at least on Friday, let's see. Friday, at least we came down, and man, it wasn't as bad. We actually were green briefly. It wasn't as bad. It had a huge sell-off on Thursday, and then we had the days leading up to that, some big moves to the downside. $100 is going to be a key psychological level on it. I don't know if we're going to get down there just this fast. I think at some point we're going to have to push and snap back, and I wouldn't be surprised especially if the market has any strength in the next couple of weeks, into the first month or two of the year, that we get a snapback, and that snapback could be quick, could be aggressive, shorts covering, it could be the unwinding of some short positions who did very, very well, and we could snap right back up to this 160 to 167 roughly, maybe even 170, give or take. The key that I want to watch for is what happens there if we get there, right? On a bounce back, what happens? How does it look? Does it look strong? Does it regain key areas? Does it regain this 170 zone? If it regains that 170 area, great. It looking better. Maybe it's worth a shot, right? To the long side if the market's strong. That's what we want to see. We're in a point where it's I don't know. You can look and say, oh yeah, there's some gaps to fill down here in the 70s and the 80s. And some high volume right here at $100. Okay, cool, great. But as of right now, it's anyone's guess where the heck this thing goes right now. And so it's not really a high interest name for me in terms of a short-term trade. If you want to buy this thing for the next, couple of months, you want to buy this for a bigger picture trade, you want to buy this for a longer-term investment, well, you're in free fall mode and you're probably getting better deals. Well, you're probably getting better deals than most people who were buying this thing the past 2 years. So great, right? That's where we sit. Now we're in recession fear news cycle, I guess. Everybody expecting CPI coming lower and lower. Yeah, that's what it seems like. It seems like more so the recession fears. And this is a concern that I have. I've been still saying it, and I don't think we're out of the woods yet on this concern of what happens if, the next next 2 earnings cycles are not bad. What happens then? If the earnings are not as bad as expected, next couple of earnings cycles, next 2 quarters, what does the market do? And does the market give you any legs into something like that? We'll see. All right, flip us in the house. Short, Sony short looks pretty. You were mentioned that in the Discord too. Let's see. Let's take a look. Yeah, it's the only thing is that it's right at that 50 SMA, right? So it might hold this for a short bounce, but if it gets back up to this 78 area right here, this could be kind of a key spot to watch right in there. If not that, up towards 79 to 80. If it gets up into these zones, there could be some rejections there. Also lines up with the 79, lines up with some prior support here too. So I like that actually a lot. You can draw in a little zone here. Let's see if we can draw in this nice little demand turn. Well, yeah, supply and demand zone. Just a demand zone. The past couple months on this guy, past six months. So yeah, so the key spot here is if it breaks down below this 76, 15, which is that 50 SMA, it's going to come up a little bit higher tomorrow, but essentially under 76 does not look great on Sony. So I like that idea. And again, you're in a bigger picture downtrend, right? You get these lower highs, lower highs, lower highs, lower highs, right? Until that breaks, until that 200 moving average here in this case breaks, that's what you're sitting in. UPST getting hit, pretty oversold. You know what? A lot of those small caps or the growth names or mid caps, even what's their market cap? Their market cap is about $1 billion, so it's pretty small. And that is now, right? The problem with these stocks right now, I think, is just tax loss harvesting season. That's a big problem. So you're seeing a lot of that playing into this. So when these things are getting hit, people are like, if I'm in this thing, if I bought Upstart this year, I could have bought this thing over $100. I could have, my average could be 50 plus easily, could be 50 plus on Upstart. Let's just say, and you're like, you know what? Let me just dump this crap, or not crap. Maybe you like it. Maybe you still like it. Let me just dump this thing now. Okay. Let me dump it here. I'll buy it back, early next year. And if my average was, I don't know, let's just say $50, something like that, because I had some shares from earlier on that I was buying the dip on, and then I kept buying the dip. My average is 55, great. Maybe I can get a better average. And if you sold the past week or two, you sold around this, $15, $16, $17 area, you're looking like you might be able to buy this thing back, for less. The problem and the big watch, I would say, on some of these names, and disregard, we're still sitting in a freaking vacuum. I mean, I don't even know what's behind me. This room is still a mess. We moved in about a week ago, so I'm just trying to organize it slowly but surely, and so stuff is still everywhere. But the problem or the potential here, and I would think we got to be paying attention to, because there could be some, in a very short span of time, a large chunk of change to be made on some of these names like Upstart. You look around the board, look across. Coinbase is another one, right? Similar chart. Affirm, very similar chart. These are the ones to watch. Why? You think, these are terrible companies, right? They've been, essentially running into the ground. When we get people coming back from that sell-off into the end of the year phase and that tax loss harvesting phase, and then some money comes back into some of these names and shorts can unwound a little bit and people start covering, there's going to be, they could move 10, 20%, 10% in a day is not impossible. 20, 30%, 40, 50% in a week. It's not unrealistic to think about that with how oversold some of these names have gotten and how big they've made moves in the past. So not sitting here saying, start buying Upstart, buying Affirm. because they could keep coming down the next couple of weeks, right? For all we know. But when that trend shifts, let's say that there's a volume, there's a big green candle, a bullish engulfing, something like that, a trigger, keep them on the radar because there could be some really big upside there. And especially if you're playing, they're cheap stocks, depending upon the option, if you play options, even just shares, right? 20, 30% in a couple of days is a hefty move, and then you just grab a piece of that move. If you can grab a piece of that move and move on because you don't care about the longevity or the long term of this company, then move on and put your money elsewhere where you see better value potentially, right? Especially going into a recession, some of these companies are going to be in trouble. Higher rates, there's a lot of concerns for some of these guys. So keep that one in mind. There's other ones out there too, like Rivian. Perfect example, Rivian. Rivian right now is in free fall mode again, same chart. The all-time lows on this stock are about 1925 roughly. Actually, no, they're lower. On Friday, we hit lower. 1852. So, again, same thing here. At some point, right, this is going to have that reversal candle. There's going to be a bullish engulf and there'll be a reversal. And the thing can go, right, like it did here, from this $19 area back up to $30 in a couple of weeks. Not even. This is a couple of days. It went from this 1925 to about 30.50, which is about a 60% gain, and it did so in about 10 days. 10 days. So, you know what I mean? Like taking a piece of that, and we could be talking about bigger moves, to be honest, on some of these stocks at some point, especially if the market had some strength too. If SPY has some strength, and geez, man, I mean, you can get some nice moves. So keep that in mind. That's on the back burner, I would say. It's something that I'm going to be, I have a list of, of my risk on names. And these are kind of like some of those risk on names that I like to follow. Not that I'm holding them, or anything like that long term necessarily, but I like to follow them and they move decently. And we'll see if I can take advantage of some of these guys, in the coming days and weeks. Same thing with even some of the miners, the Bitcoin miners, crypto miners, like Mara. Mara's gotten annihilated. Here's the weekly chart on Mara, annihilated. It could come down a lot more. Yeah, it could. But same thing here. Mara can go from $3 to $6, even $9 for all we know, in a matter of a couple of weeks. Boom, 200%. You get a piece of that move, 50, 100%. Boom, that's killer. So that's what I'd be watching in terms of the potential bounce back of some of these names. So keep it on the radar. Not like, huge positions, like get ready to nail it. No, but keep it on the radar. I think it's worthwhile. So we talked Tesla. Let's go back to talk some of these large caps. Let's talk about some of these guys. So here's Tesla. Let's go to Apple. These charts don't look great. I'll be honest. I don't like this chart on Apple. I think Apple is a very similar look to Tesla in terms of where Tesla was a few weeks back. Apple right now is just teetering on potentially breaking down below this 129. I'm going to put an alert there right now because if that area goes, this could get disgusting to the downside, at least in the short term, for all we know. So let's just put this level here. I'm going to chart this out. I'm going to put an alert there at crossing down of my horizontal line. I'm going to up my horizontal line like a touch just so that it gets triggered a little bit earlier. Just so that it gets on my radar faster. So under 129 on Apple does not look good. You zoom this bad boy out. Let's just shrink this chart down. Let's just see. What do we got? So under 129, you probably got a cleaner move down to 127 pretty quickly. And then beyond that, support levels to watch is in the 125 to 122 area. It doesn't even look good there, to be honest. This has that same look, and we have this level right here. I think we charted out in a past stream. Under 110, man, there's not much volume to $80. So not that it has to go down there. There's some gaps to fill too. If I pull up the gaps indicator, check this out. Here are the gaps. These are some of these gap ups, these green boxes. There's a lot of gap ups to fill, right? So this first one's at 120. Next one here is at 112. One here is down under $100. So these could be some targets to keep in mind or watch for Apple to potentially fill back to the downside in the coming weeks if we see further downside and weakness. Again, if the market gets saved here, don't be skewed to having a one-way view, because if the market gets saved here and SPY rallies back and dare we say we put in a higher low, we test that trend line and break that trend line in a couple weeks, I mean, all these charts are going to reverse most likely, So just keep an open mind to that stuff. But in terms of short term, there could be some more juice to be had in terms of this downside on some of these guys. Nvidia, a lot stronger than like the Tesla and Apples. Nvidia right here is in a key spot. I want to see what happens around Nvidia around this like 145. It's at 152. Let's see what happens here. It had this gap down that was then filled. Let me get rid of this. I can get rid of this guy, this white box. But what I'm more interested though is this area. This is a gap up back on the November CPI, I believe. Yeah. So in Nvidia, if it can't hold essentially the 150 area where actually it fell below that level this week. Let's see. If it can't hold the double bottom low that we had literally put in, I'm going to put an alert there as well. Add this alert. Let me see. I'm going to put an alert if we crossed below 149 on Nvidia. Crossing down 149. If we break through that, that's a double bottom low on the past two daily candles. Very good chance we come down, a couple more bucks and then maybe even fill this gap that we had on a gap up from this back in November 9th into the 10th. So keep that one in mind, but it's been stronger, relatively speaking, than, Tesla and Apple. So that's something to keep in mind. Key resistance level up here above 185. You got some stronger resistance there on NVIDIA. AMD, a little bit weaker than NVIDIA, but it's at a key spot here too, right? It's sitting right this level, the 60 to 63 bucks. Why is that a key spot? Well, if I bring this chart, you guys can get a better view of this chart if I bring it up a little bit off the volume in the bottom. What do we see? Well, you'll see that we have this little, low, this relative low right here gets put in at around 63 bucks, came down and had the lows of the year at 54 roughly. And if we hold this 63, this could be a nice point for a reversal back up. So keep this one in mind. But I'm watching this one as a bounce zone. Of course, right? Market goes down? No. But if the market starts to form a base, this is going to be kind of your zone to risk off of on AMD. Yeah, that's the spot to keep in mind. And, once we get, a long way to go, but back up around this, $79 area is where I would be looking for potential breakout trades. Now, I don't trade breakouts, but I would want to be long biased above that level as long as we stay above the 79. So then inside of that chart, pullbacks are your friend, bull flags are your friend, instead of just randomly buying a breakout, right? But that's what I'd be looking for ideally if we get something like that. So we'll see. All right, let me run through some of the comments. I wouldn't touch Tesla at the moment. I to be honest, unless you are someone who is number one fine with, holding it for a while, or is fine with the risk of whatever you're risking at it, it's not respecting. When you're in a free fall, you're not respecting stuff. You can get a big squeeze out, then a dump right back down. It's going to be wonky. I would recommend staying away. Tesla puts paid last week for Christmas. Boom. Donnie paycheck is in the house, and hopefully that paid for everything, right? That's sick. One thing I'll give Tesla is that it's oversold. Yeah, again, that's true. It is extremely oversold. So back to that Tesla chart. We'll kind of run through some more of these large caps in a second here. I want to go through a couple sectors, and then we'll run through some small cap watch, build a little bit of a new watch list maybe on small caps and get a feel. I mean, it's on the I don't really care too much for RSIs these days, but it's oversold. I mean, it's oversold. And you don't need, again, the reason why I don't really care for RSIs, it's like I can see that that's oversold. I don't need an RSI to say, oh, it's at a 30 on the RSI, it's at a 22, it's at a 10 on the RSI. I can see it's oversold. It's pretty oversold. Let's see. That's the thing on those uptrend, even downtrend days. A firm upstart can move 8 to 15%. Oh yeah, 100%. Yeah, and that's why it's going to be fun to play them. Again, the bounce back, they've been getting crushed. So that squeeze back up, short coverings, whatever you want to call it. People just getting, people who are playing the tax loss harvest, want to buy back in, the next couple of months, next couple of weeks, really. Probably going to get some good moves up. Again, do they hold? Who knows, right? Who knows if they end up holding and whatnot. I'm not trying to bet on that. I'm more so looking at that as there's opportunity there. And, 8% in a day, not to say that, the stocks are cheap and an 8% move on on an Apple is going to be substantial, right? Option wise. But again, 8%, not like, you got to go gamble on out the money options, but a couple bucks out or a couple dollars out the money on a Friday expiration, playing it on a Monday or a Tuesday, or even a Wednesday, and you get an 8% move in your favor, those options can go wild, right? So something to keep in mind. Now, would I play, would I start swinging those things right now? Probably not. No. Maybe you can look at that and say, hey, I'm going to swing it out for the next 2 months, and either it's going to hit my X% loss, or it's going to hit my target of 100% on an option play. That's for example, I don't know, on a Firm or Upstart or whatever, and you either get it or you don't. But you're buying a falling knife, so I'd rather just play the intraday, to be honest. If I saw the strength, then play the intraday opportunity. Got Apple puts. Yeah, I mean, those, if we see further weakness, I think that's going to be good. Let's talk about the upside, though. If it gets back up over, what did I have this zone? That was a gap. We filled that gap pretty quickly this past couple weeks. It's this downtrend here. It's got a while to go to that downtrend, so I wouldn't even say that. But if it gets back over this 137 area, and it holds that would be kind of concerning, right? In terms of if you're in puts. But it's at support right now, and you're looking for this thing is either going to break through or it's going to hold a bounce. So we're at a pretty crucial spot on Apple. Now, I haven't really looked at it too close, and I haven't traded Apple in a while actually, but could be on the radar this week, especially if that level breaks. That alerts alert is in play potentially. Amazon done free falling. Yeah, here's Amazon now. It fell down to 82.25, and then it bounced back a few bucks on Friday. It's going to be in this weird zone. I want to see it get back over $90. Until then, I'm probably not going to touch it. Outside of maybe short, right? If it gets back up towards 90 and then rejects, that's a short, I think. But over 90, I would want to see. This 82, what is that level from? Oh, yeah, that's COVID lows. So you're at COVID lows, pretty close on Amazon. The 81.25 roughly is the COVID lows. So you're down at COVID lows. It's crazy. Not bearish on mid smalls. Already I've gotten obliterated. That's the thing. And I think that if you're going to be looking for more blood, yes, you can get bigger moves, and we've seen bigger moves in the mid to small caps right now. But the better risk reward, especially as these moves get bigger, is not going to be. Tesla's a different story, but your better risk reward shorts are not going to be playing those Cathie Wood stocks right now. They could totally get further crushed, right? But realistically, they can have those huge squeeze outs intraday or intra-week, and you could get destroyed off of a swing short on those very, very fast. If you're playing options or if shares, different story. You might have a longer term thesis. But again, right? Why short these things as they're, hitting 52-week lows, every single day for a couple weeks? At least, short it on a bounce on a green day. You know what I mean? If you got to short them. But I think the bigger cap techs and those guys that, some of those charts, Apple looks like the next beast to fall. And especially that too. If Apple starts to break down, that's a pretty big weight in the S&P and the NAS. So it's going to probably put some further pressure on the market. Does it mean we have to go down? No, because what you guys are seeing is that Apple, Tesla's got a pretty big weight, Amazon, Google, these stocks. Look, here's Amazon's chart, right? Here's Microsoft. They're a big weight in the S&P, right? Microsoft, not as bad as Apple. It's had a decent bounce back the past couple of weeks, so it's actually looking closer to the S&P. But Google's chart, down very, very close to those lows. So get rid of some of these zones. Very, very close to those lows on Google. Yeah, Meta, that's not a huge weight either. Meta's chart does not look too bad. ExxonMobil's got a little bit of a chunk in the S&P, I believe, as well, looking pretty strong. You're seeing that if that Apple goes, it's going to be a pretty big push to the downside, I would think, and the S&P. But again, you're still seeing that despite these charts skewed really close to lows across a lot of big names in Tesla, Apple, whatever, on the year, you look over at SPY and you're like, it's not actually as bad as I thought. And it's because there's rotation. In bear market, there's rotation. And right now, in terms of rotation, let's talk about where we're seeing rotation and where we're seeing better action. So here's SPY, S&P 500 ETF. Here's QQQ. So let's talk about the NASDAQ, right? A lot weaker. You can't deny it's a lot weaker. It's very close to those lows of the year, right? We were $10-15 away on QQQ from a new low. SPY has still got to go at least 30-something bucks down. Of course, SPY is $100 more expensive than QQQ, but percentage-wise, QQQ is about for 5% drop from here on QQQ, and you're at a new low on the year. SPY, different story. SPY would need to drop about 9%. SPY has to drop like 9% from here. It's almost double what QQQ has to do to get a new low. So it's showing some better strength there. IWM, small caps. How far do they got to go for a new low? Small caps, IWM's got to go about 6.5%, 7% to get a new low on the year. A little bit better there, to be honest. It's decent. It's still not looking like this is not a spot I want to go long right here. It was a prior support, now turn resistance. I'm not going long, but if you regain 175 on IWM, okay, that shows me something more constructive. The Dow, a lot stronger here on the Dow, holding that 200 moving average beautifully. That orange line right in here. That level the Dow is holding, at least as of now, the 325. We'll keep that one in mind on the Dow. But much better strength there across the Dow. So, look around the board and you're like, oh man, all these tech names are getting crushed. Well, a lot of these other, value names and boomer names, whatever you want to call them, are doing a lot better. And so that's maybe where you want to be looking, at least for now. Okay, TLT, we covered the 10-year. It's kind of the same deal. XBI, really weird. Really not weird. It's just XBI has been consolidating since September. It's been this range from like mid 70s to mid 80s. We're looking for a break at some point. This is the biotech ETF. For those who are not aware, this is the biotech ETF on the S&P. We want to see a push up over 83 or a breakdown under 78, or 79. Give us one of those directions, and then we got something to play off of. But until then, it's like, okay, barcode, chop. SMH, semiconductors. Look at AMD and NVIDIA. They're pretty similar charts, to be honest, to this. We'll leave that alone for now. XLE energy doesn't look too bad. We just saw a brief look at ExxonMobil. I'm going to pull up ExxonMobil in a second, but it doesn't look too bad. So this is coming up into a spot that I would want to see how it reacts here. So XLE, I would by no means go long right now, right? This is key. If XLE rolls over and can't break this upper 80, 88 to 89 level, $90 I would say is your last ditch. If you can't break that and you roll over, I would think that you're going to break down and go sub $80 at some point in the coming months. Outside of a freaking, melt up stock market rally where everything will go up, outside of that, this is not looking great. So short potential opportunities there, off some rejections, but it's trying to curl up and at least retest some of the breakdown zones on XLE. So be careful there. But with that in mind, here's ExxonMobil. Same thing. It's right at the resistance levels. This 109 is kind of key. See what happens up towards 110 on ExxonMobil. I'm not really super sure I want to touch that right now, to be honest. So that's that. Now, going back through the list of some of the sectors, here is the financial sector. So some of the bank stocks. XLF is the financial ETF. A little bit of a gap fill back up to about 34.50 on XLF, but it's just this consolidation phase right now. Just consolidating. Just chilling in right here. Needs some better direction, I think. Under 33.25 or up over this 34.25. It's in between. XLV is a healthcare ETF, a lot stronger. Notice this, it's a lot stronger. But to be honest, on XLV, which is this, a lot of a really nice range. You're going to have that almost that megaphone pattern that people are talking about these days, right? Where it's big, massive setup where you have these huge range. The range just gets bigger and bigger and bigger as time goes on. But you're up towards the higher end of this. It's been showing relative strength though. You're up towards the higher end. You're sitting here at 136. Not that far off from a new high on XLV, to be honest. But keep that one in mind. As long as it holds that 50 SMA, it's looking bullish to me, right? So I would say this is kind of your zone to watch on XLV. So why watch this? Then you can look at healthcare names, Pfizer, mRNA. There's other ones out there, I'm sure. Those are the ones that come off the top of my head because COVID and stuff is, I guess, the most recent, healthcare names that we were playing. But something to keep in mind. So we covered that. I did want to mention this Meta. I want to cover a couple other names, and then we'll dive into the small caps. Check out Meta. This is interesting. This chart is interesting. This is a high watch, I would think. So I'm going to put this one on my list too really quick so I have it for tomorrow. I've been looking for a potential long idea because I don't really like some of the large cap charts, like the Apple chart. I don't like that for a long, at least for right now. Got to get a couple more dollars back to the upside. Show me you're holding some strength before I feel comfortable playing that long. But Meta up here, let's take a look. Let's see. This is the downtrend on the daily chart. So up over this like 118, it's like 118.50. That's looking like a long on that. And then below this like 113, that's a short, right here. But it's got some good strength, to be honest, man. I kind of like it. I do. Over 125, maybe you're pushing up into the 130s. It's gonna be the next target to watch, right? This thing got crushed, got annihilated. The thing went down to, what is that? They went down to, what is this? Down to $88. Now it's sitting at 118. The range is really nice, and that's just in a couple of months, 2 months. It's a really good range on Meta. End phase we'll see. It looks like it's starting to kind of roll over here. So it's trying to do this little, but it's been a super strong stock. So be careful. It's very close to all-time highs. It can move a few bucks very, very fast. So to me, not a huge fan right now, under $300, under 305. Yeah, I like it, but I'm not a huge fan. I just, let it do its own thing. Netflix has the Meta type of feel. I have alert set on Netflix up over 302.50 or 303 for a gap fill back up to about 315. It's a pretty big move up, but Netflix can move a few bucks pretty quickly in just, a very short period of time. So if it holds this level, this like 286, cool. If not, that could be a downside opportunity under that 286 or 285. Give it a psych level. Walmart holding this level right here. I had Walmart puts that I bought around like 152, I believe, and I was going to risk the top of that right there, this 155 area, and I was targeting the low 140s. We got it. I use it to hedge my longer term portfolio, so I just sold that. It was a January put. I dumped out of that this past week because now we're kind of in just, I don't want to say we're in no man's land, but we could easily, Walmart could hold up. It's been a stronger name the past 6 months, so it could easily hold up here and push higher, so why give it back? I'd much rather play shorts when we're at relative highs, when we're at least at trend line resistance on the S&P. Like right now we're in no man's land on the S&P. If you're going to swing, if I'm going to swing, that was a swing. That's why I mentioned it. Like if I'm going to swing anything, I would much rather swing along, if we go down here. I would much rather swing a short if we go up here, right? But if we're in the middle of that, which is where we are, like, anything could happen. And so I'm not really interested. I'd rather just play intraday and move on from that. So that's that. Home Depot. Let's see what Home Depot is looking like. Just going through my whole list. Not really a huge fan. Need under this like 310, or it's just a lot of chop consolidation till above 325 through 330 really. Caterpillar, check this one out. Really, really nice looking name. This could be a continuation play to the upside on Caterpillar. I want to see Caterpillar holding above like 238. I'm going to just write that one down. I'm going to go CAT, Caterpillar, 238 plus for a long. So as long as you hold that, which we are above that by about $1 or $2, great. If you break up over this, what do we got to like 240 or 241 almost this past week? All-time highs, they're up around 246, 247. So it could be a push to all-time highs here on Caterpillar. Super strong name. This looks like a bull flag to me. And based off of the poll that we had here on Caterpillar, again, anything can happen. There's no guarantees. Anything is, it's all random at the end of the day. But we can use patterns like this to give us a better risk reward. This keeps going. This could get a move to all-time highs. I think all-time highs are certainly possible there if the strength keeps up, market has some legs. If not, once it falls under 225, then I think that's when it's like, okay, it's time to go for the short side, because that's a key support on Caterpillar. Key. All right, I'm missing a lot of comments in the chat. We're gonna pull up some small caps in just a second here. Maybe we should sell some cash secured puts, and Apple might not be a bad idea. August is peacing out. All good, appreciate it, man. Amazon done free falling. Covered that. It's down towards COVID lows. Starting to show in 2023. Yeah, I think it's a pretty good bet that we're going to be seeing it. GDP's going to get pretty I would imagine GDP's going to start coming in pretty weak in the coming quarters. But again, we all want it to be like right now, but realistically, like I would say add an extra quarter to some of the time frames that we want. Like we all want this like instant gratification of like, oh, confirm recession and just, be done. It might be an extra couple months, right, until that truly, unravels market-wise. UNG. Let's take a look at UNG. Natural gas. Yeah, you know what? Let's pull this up. So let's zoom out. To be honest, I don't like nat gas. I'm going to pull up. This is a similar chart to nat gas right here. I'm going to go to pull up nat gas. Very similar charts. I don't like it at all. I think if we get a move back up into this mid fives, 530 plus on nat gas, obviously, you could short it, but it's like, okay, who knows what's going to happen. If we start to push up in here and start to roll over again, I would be interested in taking a short on it. I think I mentioned that last week as well. I'd be interested in playing a short on nat gas at some point in here if we push up a little bit more and then show signs in reverse. With a stop loss, obviously, with a stop loss probably above like 560 or 555 on nat gas. Doesn't look good. I see oil almost all over again on this chart on nat gas, and it has the looks to me, the makings of potentially, oil back when oil was like right in here. Not that oil's come crashing down, but it has the look of oil kind of pushing down below the 90s. We get a bounce back up on oil into the mid 90s, which I missed. I missed that. I wanted to do it. I missed it. We talked about it months ago. Missed it. And then I had two more chances that I also just missed back here because I was looking for a little bit higher. It just didn't happen. But it's what it is. Never perfect. So I don't want to jump the gun, but I would be looking at further downside on that. We'll see. We will see. Bigger picture. But right now they're up. Oil futures are up about 1.5%. Nat gas is up about 2.7. They move a lot. Nat gas moves a lot, which is kind of fun. Bank of America, Wells Fargo got destroyed, but JP Morgan held up pretty well. Interesting. That actually is interesting. But it's stuff like that you can use to play off of, if you look at like banks, financial stocks, and you're like, I want to short these, this charts don't look good. If you look at that and you say, okay, great. It's a red day. The market's red. Cool. I like the downside here. Okay, well, I'm not going to short JP Morgan because it's got some strength. I don't know why. I'm not going to touch that thing. Just like I like having, AMD, NVIDIA, and then even TSM are a couple semiconductor plays. TSM, like, you look at a couple of those and you sit there and say to yourself, AMD's green, NVIDIA's red, TSM is green, market's red. I think it looks like we're rejecting off this level. I think that we're going to see downside, and you would short NVIDIA, right? The red name instead of the green names. In the past, I used to be under this impression like, oh, the stuff that's up more has more downside to go, but realistically, it's up for a reason. There's relative strength there. I'd rather short the weak stuff because again, that can always change tomorrow. But right now, today, if this is relatively weak versus this, or even this past week or even month, it gives you an edge, I think. That's how I like to use it. Head and shoulders on Apple. Let's take a peek at that. Well, we looked at Apple's chart, right? We could look at the breakdown potential on that thing. But if we look back at this chart, it doesn't look good, dude. Doesn't look good. Yeah, your neckline is like, this looks like you're setting up for a neckline break right here of this 129 area on Apple. Some veer long cat Han EMER. I like Caterpillar HON. Let's see what HON Honeywell. That looks pretty good too. That holds. If that holds this 205, that looks good. EMER. That one too. Let's just zoom this bad boy out. Real estate development company. Interesting name. Not much volume on this guy, unless I'm looking at the wrong thing. Okay, now what I want to do is I want to pull up some FinViz goodies. Let's see. Let's go and do what we did last time. So what's been hot, right? If you were to go back the past couple of weeks, or even just look at the top percent change, APE, well, that's AMC's, whatever. Aside from the meme names, top gainers, you had Mobile Global Esports, a couple of solid days, interesting. Cores, CORZ, software name, NH Health Information, Biotech, PRDS was a bio, DBVT, Biotech. There's a couple biotechs in there, another biotech, CYM or CBAY. It's a lot of biotechs. So what that tells me is it's time to hunt for some more biotechs. We don't have to only hunt for biotechs, but right now it's working pretty well. So I'm going to go to micros. We want to look at super small caps. We want to look at micro caps under a 300 million market cap in terms of where we see the potential for the best risk reward. To be honest, the stocks under $1 have been doing the best. I'm going to go to price under 5 for now. We can adjust that if we have to. Let's go to relative volume. I want to see over a 3 relative volume because there have been some names just like that, and over a 2 honestly doesn't get us down enough. Let's go to sector. Let's see. I'm going to go to sector. Go to healthcare. You could probably start there. It's going to give you 42 tickers. To be honest, it's a decent amount. But if I was to go in even further into industry, go to biotech. Going to give us 32 tickers. And then we go to charts. And boom. Just like that, we got a bunch of charts that we can play off of. Now, which ones do maybe we want to look at? I don't like looking at these things that are up a crap ton off the lows. I don't like that. When it comes to swings of these guys, what we're looking for is stuff that's been obliterated, and then the relative volume comes in. ACHL, I believe, is it on my list? Yes, it's on my list already. I already have it on my list. But ACHL fits that bill, right? Like we have mega volume on this thing. Like there is a ton of volume coming in. I'm sorry, I'm blocking it. Look at that. And the thing is just trying to base at 80 cents. That actually hit 75, bounced to 80. It's in this little weird range. But look at that volume. Someone is loading the F out of this thing. Someone is loading the absolute living shit out of this stock. For why? Why? Let's see if there's any news. Pop the news. December 20th, they're presenting at the JP Morgan Healthcare Conference. Who cares? Presents an encouraging phase 1 and 2A data update. So this is a play. I'm going to put this one down too. What is this one? To make sure I have it quickly added to the swing list, because that's a beautiful look. Under 75 cents, I'd be concerned. I'd give it a day or two, but these are the types of plays where I'm willing to risk 25% to make 100 to 200%, right? On the ACHL. So that's ACHL. That's like my favorite one off the top right there. I want to look for something else that looks like similar, right? So EDSA, for example, here's a perfect example of how this looks, right? All of a sudden, big volume comes in. The thing is coming down. It's building a nice base under $1. Starts basing. Volume comes pouring in. The thing goes from $1 to $2.50 in a matter of 3 trading days. Boom. It's all about spotting that volume. That's what it's about. So using FinViz is going to be key, right? To spot that type of stuff. Okay. Keep on going through. Not seeing the ton of volume here on like an FNCH, Finch Therapeutics. It just bleed like these types of charts. They're just going to bleed. Let me just get myself off the screen for a second because it's easier to see. These charts where we just kind of bleed out. That's fine. Like that's great. That's telling us we're getting close. This thing went from in a couple of weeks went from $1 to 36 cents. That's telling us we're getting close, but we need to see better volume. We got to see a little more volume on FNCH. Now, it might be skewed because of this May volume. Let's just check out FNCH here. Pull it up on our charts. Go up to the daily chart. Yes. Okay, different story. Because we had this mega volume day back in April, that's throwing off our charts. Now, if we zoom this guy in, what do we see? I wouldn't say that it's time to buy this thing blindly because you're buying an absolute falling knife, just like a Tesla. It looks like Tesla, right now almost. But what the heck is going on here? I mean, that is insane. That volume, we haven't seen anything like that the past 6+ months on the stock. Nothing. So if it comes down, builds a base, and starts to hold a level, that is where you enter, right? And then you have a stop loss below the lows. Or you can hold it into a catalyst. You look into the company, they got a catalyst, how much cash they got, what's going on company-wise. Of course, there's a lot of reasons why these things could be getting destroyed. Could be everyone just getting the hell out because they want to get the hell out. Because if it's going under, it's going under. That's why you got to look at cash, look at the recent earnings reports, make sure the company's not going anywhere, at least right now, and then it backs your way into a couple day, couple week, or couple month swing, and that's it. You don't hold these things for longer than that. And if you do, you end up a bag holder and you lose a ton of money, as I have done in the past. So seriously, you gotta be careful. But I'm gonna add this one to my watch list because I want to just kind of pay attention to it. If it runs, it runs. But if it doesn't run, then I'll have it up on my list. And if it starts to base, ideally, somewhere in here, then I'll be looking to potentially take an entry at some point. I'm in 3 right now. I'm not going to have more than 3 at a time, unless it gets super, super hot, like 2020 type of hot, which I doubt is going to happen. So whether, either hit a stop or I exit my current small cap swings, then I'll enter some of these guys, potentially, if they're still on the list and they still make sense and they're still viable plays. And to be honest, guys, we're sitting here looking at biotechs. I mean, there's a ton more other stuff out there. It's not just biotechs. This is something that could take hours. You could just kind of comb through and have a huge list, of stuff. Here's another one. Let's just look at this. FWP. Interesting. This has got some, not too much volume. I don't like that chart prior to that. I'm going to move on from that one. Not a huge fan. Let's see. NXTC. Check this out. NXTC. It's a prior. This stock has, oh yeah. That's what you love to see. Look at that volume on Friday. My goodness. That's a nice one there. NXTC. A ticker that has run massively in the past. If you go back out in the past couple of years, what you'll see is that it's gotten obliterated. But look at some of these big spikes. These are the spikes that you like to play off of, right? So even this spike doesn't look like a lot, but what do you have? From, what is this? This low right here of 6 something goes to 9, 30%. Something decent to play off of. This hasn't run in a while, man. This is interesting. NXTC. A lot of volume coming in. It's on the list now. It is on the list. Add her to the watch list. Now we'll keep an eye on her, and we'll see what she does. Next page. Let's see what we got. Last page. Anything looks good here. Some of these already ran. PTN. XCur. You see what's happening here, right? Volume's coming in. Now it's perking up. Could go for more. I'm not really super interested. The thing's already up, like 50, 60% from where it was. Let it do its thing. But again, same concept applies to that name. Back in here. And to be honest, that's good for me. I'm good with what I have. I've got a lot out there. Now again, right, we're looking at a couple of these names, right? Let's go at it. Let's say you get out of healthcare. You get out of biotechs. How many stocks? You got 83 stocks. It's not terrible, to choose from. Maybe you want to consolidate this list to sub 2 or sub 1. Under $1. If you go under $1, you got 40 stocks to look at that don't have to just be biotechs. So now you have a lot more charts to play from that aren't biotechs, right? So same thing, same concept applies. I like the biotechs because a lot of them have really good news potential. And a lot of them are trading well under cash value, at least as of right now. That won't necessarily stay the same forever, but for now. And so we'll keep an eye on that. But that's a good list, man. I think that's I'm good with that. There's, like we always say, there's a million. So, you can get overwhelmed and you're going to miss a ton. But guess what? I'm fine missing. I don't care if I miss 30. I get 1, I get 2, little by little, stack them up, and that's it. It's the high probability stuff. That's what's important. So we'll keep an eye on those. And with that said, let's jump back to futures and see what they're doing. Futures are up. Yeah, so we had a little bit of a break of that flag almost. Popped up. We kind of got another one coming in right now. Trying to build something off of these little intra future session flags. Almost is kind of what we got. So we'll see what happens if it holds or whatnot. A lot of hot stocks have been reverse splitters. Yes, they have. Market open. Yeah, futures are going. Futures are up around that 3,900, pretty key spot. We'll see. High volume watch list, ACHL, NXTC, and then TKRA. Trade talks in 1 and 8, under 50 million shares outstanding. Major indices, 1K tickers. There's a lot of tickers, but yeah, there's a million. There's a friggin' million cores. Let's pull this guy up, and then we'll wrap things up because we've been going for a bit. Yeah, I mean, this thing is wonky. Had that little break of that wedge, and now it's right back. I don't know. The volume is interesting, right? But I'm not a massive fan of the wonkiness of the chart personally, but that volume is notable though. Past 3 days. Rather be warm than freezing. Ready for some scalps. Yeah, I am in the same boat in terms of being warm, man. I hate it when it's cold. Snow in New York, back to DC. Even in Texas this past couple of days, now today was in the 60s, so it was like, okay, we're back to normal. But it was like I moved here for that reason. Now I snowboard. I love snowboarding, and so I make it a point to take a trip at least once a year. Try to get out and hit the mountains and go snowboarding. And I'm fine if it's -5. You know, I'm fine if it's 10 degrees, whatever. You're having fun. You're bundled up. You're snowboarding. You're having fun. But day to day, I mean, if I just prefer not living where it's cold all the time. But that's just me. Everyone's different though. So with that said, though, I'm going to wrap things up. We are looking right now at a green future session. We'll see if it holds. But maybe Santa's coming to town. A little late, I guess. Oh, technically, this is the time. This is the time of year for the rally. So technically, it's true. But short week, Tuesday to Friday. We got some bigger, not much news, but there's jobs numbers, and then there is Chicago PMI on Friday. The more impactful news will come towards Friday. So come towards Thursday, Friday. So first 2 days, I'm not expecting too much news drivers, more so momentum, and whatever happens. But then beyond that, we shall see. Thanks so much for watching, guys. Hope you got something out of today's stream. We do these every single Sunday. Technically, today's Monday, but every Sunday before the week begins. And so we're going to keep doing it. And we'll be live this week. We'll see, but we'll be live. We usually go live Monday, Wednesday, Friday. Maybe we'll do a Tuesday, Wednesday, Friday this week to get those 3 lives in like we usually do during the week for Power Hour, last hour of trading if you're around. I do want to do more like night streams, like this time of night, maybe even later, to be honest. During the weeks to come in the next couple months, I think it's more fun. More people can hang out, off school, work and stuff. But we shall see about that going forward. Links, resources, all that good stuff. Link down below. Thumbs up button on the way out. I appreciate all you guys. Have a great rest of your night. And if you're off this week, have a great week. Hope you had a great Christmas, great holiday time. New Year's coming up. I will see you guys tomorrow. Peace.